Where do we begin? I guess we'll just pick up from the last video and we'll go from there, what I was discussing, what's changed since then, and how we're looking moving forward. So first of all, obviously the most obvious pattern you can see here is an impulsive 5-leg to the downside, right? 1, 2, 3, 4, 5. And this is the final leg of this purple leg within the white, within the red, within the orange, yada yada yada. We don't care. We're looking at this week. And actually, I'm gonna need to pull up, I think it was like, I put it on Twitter. Okay, here. So this is what we were looking with before. I'm gonna compare the two rates. This is what we have now, and this is what we were looking at earlier in the week. And so the reason we were looking at we were looking at the final extended fifth wave and something called an ending diagonal, where it looks like this. So the downside, it'll be like 1, 2, 3, 4, 5, kind of like that. And the key takeaway is your wave 4 goes into the territory of wave 1, which can't happen unless it's a diagonal. So think wedge also, or channel, I guess. And anyways, the reason that fell through is because, well, it looked like this. I think the channel was, yep, that's regression channel. Oops. Right, it looks something like this. And I believe this was on Wednesday. This was the signal pretty early on in the day that that was not going to happen, because as you can see, we broke out of the channel. In the ending diagonal, we would have expected to keep breaking down into here where we had 1, 2, 3, 4, and then a final leg down to complete it. Instead, what happened was a fractal, actually, of basically what happened about a month ago when we ran to 175 in the after hours. So basically this move right here, this ABC, same thing right here. ABC, ABC. And if you remember from the last video, first of all, expanding flats will look like this. If it's to the downside, it'll be A, B, and C. And that's what your expanding flat's going to look like if we're going down and not up. And so, in this instance, right, if this was A, B should be larger than A. So we're going to measure the length of A and see if, well, we came below the 1-to-1. Usually you'll see the 1-3-8-2 tick. In this instance, we actually would have been looking for a running flat before the expanding flat, because 1-2-3-6 tick usually signals a running flat. But if you pass the running flat target, then it's on to expanding. It's just a process of elimination. And so finally, for that move, we'd expect either the 1-to-1 or the 1-6-1-8. So those two targets came out to 153 and 173. I did this in the last video, so you kind of get the idea, but basically this was the tick up here, the 1-6-1-8 expanding flat. Now we're going to go down to last week, same exact thing. And first you need to understand the count leading up to it. So in this interpretation we have 1, 2, and then for the third wave, 1, 2, 3, 4, 5 into 3, A, B, C into 4. And this, I was trying to count this as an impulse at first, because I was trying to find a count that had this right here as the bottom, but this was moving up in a weird way and I couldn't really put it together. And then after closer examination, you'll see what we're working with. But anyways, now let's check the ratios. Measure A, and there's a perfect 1-3-8-2 tick. So that's your cue to look for the 1-6-1-8 extension in the upside next. And in this instance, it came out to 114, but none of the hourly candles closed above. And if you go to a 4-hour, yeah, see, same thing. Once that was completed, or once we saw that move, we can think, okay, finally we're coming to the end. We have 5 more legs down and then we're done. No more downside, and finally we go up. And this is where it gets interesting. So there's a bullish and there's a bearish interpretation to be had here. And honestly, I don't really favor one over the other. Obviously, I want us to go up. I think that'd be cool, but like, I don't know. We'll have to see what tomorrow brings. But anyways, the bull case looks like this. And it's weird because we're looking at 1, 2, 3, 4, 5. But in this instance, 3 isn't the longest, but it's not the shortest. And so by definition, this is allowed. And we can see that wave 3, if we're looking at it from down to here, then it's 0.786 of wave 1. But then if we look at the size of wave 5, didn't even take the 618. And so this is a possibility that we have bottomed and we're going to begin to move up in something called a truncated fifth. And what that is basically is when your fifth wave terminates lower or higher than expected, meaning if we had expected a 5-wave move down, right? I'll visualize it like 1, 2, 3, 4, 5. Normally we'd expect the fifth leg here, but if we saw the fifth leg terminate here, that's a signal. Okay, well, one, that's a truncation, and you need to look closely into the subdivision to make sure this is the case. But if you see that, then that's a signal for a huge reversal. So it's possible. I've seen a few Elliott wave interpretations where they counted the move up to here as a truncation. I think it was something like 1, 2, 3, 4, 5, and that was a truncation, which obviously, you know, what happened next. So, like, it's possible. And finally, to see ratio-wise, like, what supports this. Remember, wave 5 targets, 0.618 to 786, waves 1 to 3. And so the degree we're going to be looking at in this instance is the gray. And so I already have it drawn in here, but I'm going to remove it so you can see the process. Going from the beginning of this gray impulse within the beige, right, we're going to go top of 1 to the low of 3 to 4. And see, there's a 618 tick. So it's possible, but we don't know for certain. And with that being said, we also need to be aware of the possible bearish outlook for the week before we begin to reverse. So for one, we are close. Obviously, we're very close, but have we bottomed? It's too early to tell. We just need to see how this plays out. But if we're not done, a way to look at this would be like, this is basically the equivalent to somewhere around here. And I mean, visually it looks the same, obviously, but if that's the case, then the targets we'd be looking at would be the 618 down at 68.15 and the 786 at 54.3. Like, we just don't know. All of these targets down here are potential ending points for the downtrend, but as the saying goes, we're in a downtrend until we're not, and until we get some sort of signal that we are impulsive again, we just can't say for sure. Now, signals that would mark the impulse or the downtrend is done, most importantly, we'd be looking for a break above this wave 4 high right here. If we can break above this in theory marks the end of the downtrend, because right now we're looking at this as the beginning of either the end of the fifth leg down or the beginning of the fifth leg down. And if we're looking at it as the beginning instead of the end, we would look for some sort of rejection below this 119 level. So any of these levels are game here for rejection on Monday. If we are green out the gate, but we can't break any of these into the week, that would be a signal to expect more down. And fair warning, the move down with the rejection on one of these will likely be pretty steep. But we just have to watch it closely. And forecasting that, assuming we get a typical impulse down and not a diagonal, see again, this type of forecasting isn't that helpful. But if we reject, I don't know, let's say the 786, then the next 1-to-1 comes down to 81, and then from there, if 81 goes to 92, then finally, see, like not useful, and let's not even discuss that. But we just need to see where we open, if we reject any of those or not. If we break above 119, it's game on. Obviously, we'll come back below it, most likely. If we do breaking above this level signals that the downtrend is done. So that's the biggest thing to look for this week. Get it? Got it? Good. All right. I'm so baked.